Hey everyone, it is Evan here from the Trade Risk on Tuesday, January 22nd, here with a midweek market recap video. We're going to be a little bit shorter in this video. I'm feeling a bit under the weather and markets were closed yesterday. We did our weekend video on Friday, so we did get some movement today, which is why a little more compelled to do today's video. Otherwise, not generally a fan of overanalyzing too soon after our last video update, but I'm going to do a short one here just on the major indices. Let's start it off with the S&P 500 weekly time frame. You can see here on Tuesday, it's of course now at this time only been 1 day worth of trading because of the holiday yesterday, but you can see we started off to the downside, 1.75% here on the S&P 500 weekly chart, and there's good chance this week that we will print an inside week. That means we will trade entirely below last week's highs and above last week's lows. We had a large range last week. We're starting off on the down foot here. Now, unless we see selling accelerate to another 2% plus to the downside, or if we see things reverse enough to another 2% higher to take out those highs, that certainly could happen. But as it stands now, it's looking like, and again, it's early, but 3 days left of trading, that we could have the potential for an inside week here. Now, the key that I think the bulls will want to key off of and hold is this 2600 level. We talked about 2600 when we were below it and we were racing higher. We were looking at this as a potential spot for resistance, the breakdown level, as it were, back in December. Lots of overhead supply, lots of some technical confluence here around 2600, but we cut right through it. We just launched higher through it last week, and now we're starting to pull back. So when we look here on the weekly chart, not a whole lot has changed as of yet. We need to take out the lows here from last week around 2570 or accelerate higher above 2675 to work our way back into that late 2018 range. When we go down to the daily chart, though, we can get a little more refined on the levels that we're looking at, and we can see here even this 2600 level shows up pretty clearly here. And what we're noticing now is that couple of things. First, we went sideways. If you recall this period here where we went sideways for about 4 or 5 trading days, depending on what major average you're looking at, but for the S&P 500 went sideways for about 4, broke out on that 5th day above this 2600 level, and then we saw this real acceleration higher here late last week, Thursday, almost 1% gains, and then Friday 1.3% gains. So a nice kind of steep acceleration, or steeper acceleration, away from this 2600 level. But what we'll notice now is that with today's action, we actually had sort of a gap and failure, if you will, gap and go to the downside today. We gapped down in the US major averages this morning, and we never filled those morning gaps. We essentially gapped lower, and then we proceeded to sell off intraday and close the session towards the lows of the day without filling this gap here. Breadth was extremely negative today. It was the most we've seen in terms of negativity, at least in terms of AD. In terms of the advanced decline line, wasn't a tremendous amount of stocks hitting new 52-week lows today, but AD line was certainly tilted negative, and we did have that failure to close the gap. So basically, the way I'm looking at this now, and all of the major averages line up in the same formation here, is we can draw our trend lines from the lows of this start of the rally. You could start from this pivot low right here, or the higher low we sort of put in back here on the 3rd. Whichever you draw, you're going to get pretty much close to where we finished today on the session. You're going to get your bottom trend line right around there. I'm more of a fan. I do like, I will pay attention to those trend lines, but I do like the horizontal levels as much as I can. And that 2600 level, that coincides nicely here with the S&P 500, because that was the top end of the range we carved out for 5 days. We broke higher from it, and now if we get a follow-through selling day, which is something we just have not seen since last year, since the 24th, since Christmas Eve, we have not got follow-through selling to the downside. Each and every time we did have a down tick or a down day in the market, starting with the 3rd here, we just saw a complete reversal, and very quickly the next session. You can look at all these smaller examples in this range as well. So tomorrow, do we actually see a change of character? Do we actually get a follow-through day of selling to the downside? Can we close below 2600? Can we start breaking back below this old breakdown level, if you will? Maybe maybe this was the bull trap right in here, an overshoot of 2600 and then a loss of that level. It's too early to say that. I'm not going with that thesis. It's just something to keep an open mind about. And for me, I think the IWM is still kind of the canary in the coal mine that I'm looking at here, because this has led in both instances to the downside and then to the upside. And you can see here, this one did get a late start on the breakout resolve higher of this range. And notice 145, this was 144 and change. This was the breakdown level that we were coming back up to retest. It didn't get as high above it, and now it's already back to testing that level now. So it's threatening a potential kind of trend line break here and this 145 level. This is what I'd pay attention to tomorrow if we can get follow through in the IWM to the downside. Maybe we have some shifting currents here, or maybe it's just a two-way trading range that's going to develop. But at least, you know, the strong march higher that the bulls have been kind of, in paradise, kind of levitating higher here without any real selling pressure. Maybe that's finally come to an end, and we're about to see a little more chop kind of set in here. Don't forget, we have earnings out, or we have earnings season that we're in the middle of right now, or companies reporting as I'm recording this, and then of course in the weeks to come. So that's what I'm basically looking at. Same thing holds for the Qs, you know, looking for that follow through day, looking to see how it starts to resolve around these prior lows. Can the sellers actually sink their teeth into a multi-day sell-off here? Can volume pick up? Can breadth continue to expand to the downside? That would set us up for perhaps a bigger retracement. For now, this is a one-day selling event. Bull trend is still intact here in the short term. So let's wait and see how the dust settles. Let's see how they follow this up tomorrow, and certainly towards the end of the week. So a little bit shorter today, but hopefully you guys are off to a good start to your week. And as always, do keep an open mind in this market, because risk can change hands very quickly to the upside and downside. We've seen that very clearly over the past 30 days of trading. We took the elevator down and we took the elevator right back up. So let's be aware that we could jump back on that elevator in either direction. So that's it for me. Thanks so much. You can follow us on the blog or subscribe on YouTube every Tuesday and Friday with the market recap videos. Have a great weekend. Talk to you guys later this week.